Reducing reliance. India's trade shift from China. India is actively trying to reduce its dependence on trade with China. This strategic move is part of a broader vision to strengthen its economic sovereignty and ensure long-term stability. This is driven by a desire to diversify its supply chains and boost domestic manufacturing. By doing so, India aims to create more jobs, enhance its industrial capabilities, and reduce vulnerabilities associated with over-reliance on a single country. The recent border tensions between the two countries have further accelerated this shift. These geopolitical conflicts have underscored the risks of heavy economic interdependence and have prompted India to rethink its trade strategies. India's reliance on Chinese imports, particularly in sectors like electronics and pharmaceuticals, has been a growing concern. The country imports a significant portion of its electronic components and active pharmaceutical ingredients from China, making it vulnerable to supply chain disruptions. The government has implemented policies like Make in India to attract foreign investment and promote domestic production. These initiatives are designed to make India a global manufacturing hub, encouraging both local and international companies to set up their production facilities within the country. However, shifting trade away from China is a complex undertaking with significant challenges. The transition requires substantial investment in infrastructure, technology, and human resources. Additionally, India must build strong trade relationships with other countries to replace Chinese imports. India needs to address infrastructure bottlenecks, improve its manufacturing competitiveness, and navigate global supply chain dynamics. By overcoming these hurdles, India can achieve a more balanced and resilient trade ecosystem, ultimately fostering sustainable economic growth and reducing its dependency on any single nation. MC Analysis: Quantifying the potential shift. In today's global economy, understanding the dynamics of trade shifts is crucial for both policymakers and business leaders. A recent analysis by McKinsey & Company estimates that India could potentially shift $3.5 to $5 billion worth of trade away from China in the near term. This analysis is based on a comprehensive review of current trade patterns, economic policies, and market conditions. This shift would primarily target sectors where India has existing manufacturing capabilities or sees potential for growth. By focusing on these areas, India aims to reduce its dependency on Chinese imports and strengthen its own industrial base. The analysis identifies specific product categories where India could become more competitive, such as apparel. The Indian textile industry has long been a cornerstone of the economy, providing employment to millions and contributing significantly to exports. Electronics and chemicals. These sectors are seen as high-potential areas where India can leverage its skilled workforce and existing infrastructure to gain a competitive edge. It also highlights the need for targeted policy interventions and investments to support this transition. Government initiatives, such as subsidies, tax incentives, and infrastructure development, will be crucial in facilitating this shift. However, the $3.5 to $5 billion figure represents a small fraction of India's total trade with China, which currently stands at over $100 billion. This underscores the scale of the challenge and the need for sustained efforts over the long term. This suggests that while a shift is underway, it is likely to be gradual and limited in scope. The transition will require not only economic adjustments but also strategic planning and international cooperation. As India navigates this complex landscape, the role of both public and private sectors will be pivotal in achieving a successful trade realignment. Limited diversification. Why only $3.5 to $5 billion? Several factors contribute to the limited potential for trade diversification away from China in the near term. Firstly, China has established a strong foothold in global supply chains, offering competitive pricing and efficient production capabilities. Secondly, India faces challenges in terms of infrastructure, logistics, and skilled labor, which impact its manufacturing competitiveness. These challenges cannot be addressed overnight and require sustained investment and policy reforms. Thirdly, many Indian businesses have developed deep ties with Chinese suppliers over the years. Shifting to alternative suppliers, even if feasible, would involve significant adjustments and potential disruptions. Challenges ahead. Obstacles to trade diversification. India faces a number of challenges in its bid to reduce trade reliance on China. Infrastructure bottlenecks, including inadequate transportation networks and power shortages, increase costs and hamper efficiency. The lack of a skilled workforce and technological capabilities in certain sectors also poses a significant hurdle. India needs to invest heavily in education and training to bridge the skills gap. Moreover, bureaucratic hurdles, complex regulations, and land acquisition issues can deter foreign investment and hinder business operations. Streamlining regulations and improving the ease of doing business are crucial for attracting investment. The potential shift in trade is likely to have varying impacts across different sectors of the Indian economy. Sectors where India has existing manufacturing capabilities, such as textiles, apparel, and leather goods, stand to benefit. The electronics sector, though heavily reliant on Chinese imports, also presents an opportunity for import substitution. India has been promoting electronics manufacturing through initiatives like the Production Linked Incentive, or PLI scheme. However, sectors heavily dependent on Chinese raw materials and components, such as pharmaceuticals and chemicals, may face challenges in finding alternative sources of supply in the short term. Global ripples, economic implications of India's move. India's efforts to reduce trade reliance on China have implications for the global economy. As India seeks to attract foreign investment and boost domestic manufacturing, it could potentially reshape global supply chains. The shift could create opportunities for other countries looking to diversify their own trade relationships. It could also lead to increased competition in certain sectors, potentially benefiting consumers through lower prices. However, a sudden and disruptive shift in trade could also create uncertainties and volatility in global markets. A gradual and well-managed transition would be more conducive to global economic stability. Expert opinions insights into India's trade strategy. Economic experts have offered diverse perspectives on India's trade strategy. Some argue that India should focus on leveraging its demographic dividend and growing domestic market to become a global manufacturing hub. Others caution against protectionist policies and emphasize the importance of integration with global value chains. They argue that India should focus on improving its competitiveness and attracting foreign investment. There is also a view that India should prioritize building regional trade partnerships and strengthening ties with countries that share its strategic interests. A balanced view, India's trade future and challenges. As India stands at the crossroads of its economic journey, the future of its trade policies and the challenges it faces are of paramount importance. India's endeavor to reduce trade reliance on China is a long-term strategic goal that requires a balanced approach. This strategy is not just about minimizing dependency, but also about fostering self-reliance and strengthening domestic industries. The relationship between India and China is complex, marked by both competition and cooperation. While diversifying trade relationships is essential, it should not come at the cost of economic growth or consumer welfare. India must seek new markets and partners, ensuring that its trade policies are inclusive and beneficial to all sectors of the economy. The focus should be on creating a robust trade network that supports sustainable development and economic resilience. India needs to address its domestic challenges, improve its competitiveness, and create a conducive environment for businesses to thrive. This includes investing in infrastructure, enhancing the ease of doing business, and fostering innovation. The tech industry and manufacturing sector in particular hold significant potential for driving economic growth and creating jobs. At the same time, it should engage constructively with China and other trading partners to ensure a stable and predictable global trading system. Diplomatic efforts and trade negotiations play a crucial role in maintaining healthy trade relations and avoiding conflicts. By participating actively in international trade forums, India can influence global trade policies and protect its interests. The success of India's trade strategy will depend on its ability to navigate these complexities and seize the opportunities presented by the evolving global trade landscape. It requires a forward-thinking approach, strategic planning, and collaboration between the government, private sector, and international partners. By doing so, India can position itself as a key player in the global economy, driving growth and prosperity for its people. Conclusion: navigating the complexities of global trade. In conclusion, India's attempt to reduce its trade reliance on China is a complex undertaking with both opportunities and challenges. While the potential for a significant shift in the near term appears limited, the move reflects a broader trend of diversification and a desire to enhance domestic manufacturing. India's success in achieving its trade objectives will depend on a multitude of factors, including its ability to address domestic challenges, foster innovation, and navigate the intricacies of global trade dynamics. A balanced and pragmatic approach that prioritizes both economic growth and strategic autonomy will be crucial in shaping India's trade future.